Hello, everybody. This is Fred Stewart, and I am out here in Southwest Portland with GaSandra Carlson.
Yes.
GaSandra is with Envoy Mortgage, and I'm very excited about being out here with GaSandra because she's going to be probably the first of what I hope many interviews about what it's going to take to get into a home today. I can't tell you, friends, how important it is for you to learn as much as you can about what it's going to take to be a homeowner in Portland, Oregon. So I'm going to do everything I can to bring the information to you to help you in any way that I can. Okay, hello, GaSandra.
Hi, Fred.
How you doing?
Good, how are you?
Hey, thank you very much for taking time out of your day for this today.
My pleasure.
As you know, I think educating people on the process is very, very, very important. And you've got a couple of things that we're going to talk about today. First off, let's talk about you. How long have you been with Envoy Mortgage?
I have been with Envoy Mortgage just shy of a year. Came on board in May of last year, but I've actually been in the industry for over 30 years. I started a long time ago in 1984.
Wow.
So I've seen a few things.
Wow. You know what's funny? Our average buyer was born right around that time.
I know.
So think about it, guys. Some of you... about the time that you were born is when she got into the business. Now, a lot of times in a lot of professions, that doesn't mean a whole lot. What that should tell you is that you're dealing with somebody with a lot of experience here when it comes to financing, home mortgages. So I'm always a big proponent on experience. Experience does matter in the mortgage and real estate business. GaSandra, earlier last week, you sent me some information about a loan program that you guys have got.
Yes.
Okay, I want to talk about that. Before we get into that, what are your thoughts about when a potential buyer, so when I say potential buyers, guys, I'm talking about you folks, when should you sit down with a loan officer?
I think before you even start looking at a house or talking to a realtor, you need to go and talk to a mortgage professional. What I tell my clients is it's just a conversation that we're going to have. We're going to go over all your personal information. The key to look at is 2 years of everything. 2 years of employment, 2 years of credit, 2 years of residency. There is no such thing as too bad credit. Yes, there might have some blemishes, but those are things that we can definitely work out and fix. A lot of times it only takes a couple of weeks, maybe a month. But if we get that out of the way first, then you can go and visit with a realtor and see what you can purchase, and we'll have the dollar amount that you qualify for up front, so you're not wasting time looking at properties that maybe are out of your price range.
Now, GaSandra, in order to get this done, the process is basically a short interview where you learn about them, and as you're learning about them, you're filling out a loan app, right?
Correct.
Okay, and after inside a loan app is your normal information. Your name, address, phone number, and everything like that, where you work. But how deep do you go? Do you pull credit?
And again, that's a conversation that we can have. Mm-hmm. There's a national website that people can use that they can pull their own credit report. Our government provided this so that people can determine if there's identity theft or fraud on their credit report.
Now, how accurate is that compared to the one that you guys pull for a loan? Because the problem I've had is those have oftentimes not been very accurate.
Well, I'm not talking about the free websites that are advertised on TV, and I won't mention any names, but this is through our federal government.
Okay.
And if you got a credit card when you were 13 through your parents, it's going to give us everything. You can opt to get scores, or you can opt to not get scores. They're not very expensive. They're $7 to $10 a piece.
Okay.
But what it does is it shows us everything you have.
Okay.
If there's something that's delinquent, in arrears, collections, maybe it's not even yours. That gives us that opportunity to clean that up before I pull your credit. That way when I pull credit, I have good scores.
Okay, good. So you prefer going that direction.
If people don't know or they think they have blemishes on their credit, absolutely.
Beautiful.
And they get one free report a year.
Oh, wow. Okay. And you can help them with that. If they contact you, you can connect them to the website where they can get that done.
Absolutely.
Okay.
Absolutely.
Now, do you verify their income? In other words, do you contact their employer, make sure that they're making the money they say they're making? How deep in the loan process do you get when you're qualifying a buyer?
And that brings us to the pre-approval, pre-qualification. So a pre-qualification, we can have a great conversation based on what you tell me. I can trust that you're telling me the truth, and I can say I would do a loan for X. However, I think the best way to do it is to get underwriter approval, which is a formal pre-approval. At that point, we would pull credit. We would get 2 months bank statements, 2 years tax returns, 2 years W-2s. We would verify with their employer if we had to. Get all that information, send it to underwriting, and get ink on paper that yes, we would lend you this much money. All you have to do is go and find the house.
Wow. Now, as a real estate broker, friends, I got to tell you, that's my favorite way for people to start their home buying process. Because once they get to underwriting, if the underwriter says, these are all your problems,
Right.
that gives you valuable information. I mean, it tells you exactly the roadmap, what it's going to take to get into a home. It's a little bit of time consuming, and but I think it's worth it. I think the more information you know about yourself, and the more information your loan officer knows about you, the more successful you'll be in finding a home.
I agree 100%.
Now, a lot of people out there are worried about also things like, especially first-time home buyers. There's two things I want to ask you about. One, are there any good loan programs out there right now for first-time home buyers?
Yes, there are. I mean, there's the usual suspects, as we say. There's FHA, which allows for 3.5% down. Their USDA is rural, that's 100% financing. Federal VA is 100% financing, and then your conventional loan that will do a minimum of 3% down.
Wow. So you can go down to 3% on a conventional loan.
Yes, it's called the Home Ready program.
Wow. And I've heard recently that 5% jumbos are coming.
Yes.
Wow.
Yes.
5% jumbo loans. Now, what is the difference between a regular loan, Fannie Mae loan, and a jumbo loan?
We consider conforming up to 424.
Okay.
The agencies just increased that for this year. It used to be 417, now it's 424. So we call that conforming or conventional regular loan. Anything above 424 would be a non-conforming or a jumbo loan.
Okay. And then that's for what, single families, condos,
Yes.
duplexes,
Yes.
threeplexes,
Yes.
fourplexes?
Yeah, we'll go up to 4.
Go up to fourplexes?
Yes.
Now, what about if a house has a what they call an ADU, auxiliary dwelling unit, or let's say a mother-in-law's basement or attic? Do those qualify for that?
They do, and as long as the ADU is approved by the county, then we don't have a problem with it. Where you might have a little bit of a problem, it's in a unique one time in that neighborhood, one off. Comps might be a little bit difficult, so you might not get full value for it, but yes.
What about credit score? What kind of things should a buyer be looking for credit score? What's the minimum credit score that you can work with a buyer?
And that's where it gets maybe not so much technical, but we start getting a little bit more specific. With FHA, the 3.5% down, we can go as low as 500. Bad things happen to great people. Timing, medical, divorce, death, we understand that. So we don't hold that against you. So at that score, yes, you could get a house.
Okay. What score again?
500 down to 500.
500 credit
Yes.
score. Wow.
Yeah, there's not a lot of places that do that, but we will.
Now, friends, to give you an idea where that credit score fits, the lowest credit score you could have is, I think, 350. Yeah, I think the lowest credit score you could have after 350, they just don't score you no more because you're so low. So if you've got a 500 credit score, your credit would be considered close to poor. It's not poor, but it's getting there. And now, is there a higher interest rate for a 500 credit score?
Yes, there is.
How much more is the difference between, let's say, 500 and, let's say, 700?
And that's tough to say today this is what it'll be because it always changes. But you have to understand that interest rates are risk-based. So the lower the score, the greater the risk to the lender. So there is going to be a higher interest rate.
But just to give a range, I know it changes all the time.
If I would say my conforming, or a good score, let's say 620 and above,
Okay.
would be on an FHA loan 3.875.
Okay.
A 500 score might be 4.5,
Okay.
4 3/4. So it's still a good rate.
That's still a good rate. We're talking about historically low rate.
Still.
When I first started real estate in 1988, I think my first day in real estate, September 4th, 1988, I think we were at 13%.
Yes.
And when we dropped down to 10%, we had lines around the block.
I remember those
Yeah,
days.
people freaked out, 10%. And I think people even freaked out even more when it dropped down to like 9.5.
Right.
There were probably some fights trying to get first in line.
But you know, back then we had to put 20% down.
Exactly. So we're looking at lower down payment, better rates. Now, let me ask you this. A lot of people worry about down payment. And one of the things I think a lot of buyers, the information is not shared a lot with a lot of buyers, first-time home buyers. The whole thing about gift funds. Now, friends, gift funds is exactly what it sounds like. It is when people are allowed to help you with your down payment, give you money so you can buy your own home. How much of that can be gifted? Let's say a typical 3.5% down. How much of that can be gifted?
Well, with FHA with 3.5% down, the gift funds can go towards closing costs and prepaid items.
Okay.
FHA requires 3.5% investment be with the borrower, but I take that back. It can be gift as well. Sorry.
It can be gift
it
as
can
well?
be gift as well.
Okay.
With FHA, it's 6%. So the 3.5 plus closing costs.
Wow.
So you can go up to 6%. Conventional is 3.
So, friends, say you're buying a house for $300,000. That's $18,000.
Which we never see happen.
Which
but
you
it's
never.
available.
Well, it could happen. It could happen.
It could.
It could happen. You know, some nice parents, and well, that's the next thing. Who can give you the gift?
They have to be blood relative.
Okay.
What's become more recently new is, say people live together, but they're not married.
Okay.
But if they can establish that relationship that they've lived together, they have the same address, you know, bank statements, we can take gift money now from the significant other.
Great.
Yes.
And that, of course, just to make sure, full disclosure, that's regardless of sexual orientation, right? So
Correct.
it could be a gay couple or a straight couple. It doesn't
Correct.
really matter. As long as they've got a relationship,
Right.
they can invest in each other.
Right.
Now, can the family member, let's say you're a significant other, but you're not married, can the family member invest in the significant other's partner to buy a home?
You
As
know,
a
I
gift?
bet you we could make a case for that. I've
Okay.
not seen it personally, but I'll bet you we can make a case for it. Because
Okay.
it's the same thing, right?
Yeah, same thing.
Yeah.
Another thing you got to ask, best friends. No. Weddings, you know, I've gone to a few weddings and like everybody's been to a few weddings. People like and invited me to weddings because I'm a damn good gift buyer. But what I'm saying is, lately I've been hearing more and more about people at weddings, people just donating cash so that they can buy their first home instead of buying them, you know, silverware and toasters and stuff like that. They've just been giving them cash to put into the kitty for their down payment,
Right.
which I think is great. Are you seeing that? And
You know, we've seen it a little bit, but I think where that becomes tricky is cash is hard to trace. So because we have such guidelines for actual gift funds in the first place, cash, we can't prove where it came from. The whole point of that is that we want to make sure that it's not borrowed funds that has to be paid back.
Okay.
So it's not a debt. So some clients will open up a separate account for wedding money, and if it sits there in seasons for 2 months, then we don't have to source it.
wow, so only for 2 months. So
Yes.
you open up an account with a bank, any bank, and probably federally chartered bank, credit union.
Anything.
And so your friends and family and other people that care about you, then take their money and donate it into your bank account. And you say it has to sit there for 60 days?
Yes, that is correct. 60 days.
So after 60 days, this can be used to help them buy a house.
Yes.
Is there a limit on how much money it can be?
No, because at that point, at the end of 60 days, it's their money.
Beautiful. So think about it. There's no 6% cap. There's no limits because after 60 days, the money is yours. So you get married, you open up this account, and those of you that are listening to this who've got kids that will be getting married here in the next year or two, you might be wanting to think about this. Matter of fact, I called GaSandra and I talked to her about it because this is one of the things that a lot of loan officers don't talk about. But I think it's a great gift. I tell people the best gift you can give to a couple who are just starting out, give them a gift of a home.
Right.
Help them buy a home.
Right.
Especially in a market like Portland. Now, I want to ask you about VA loans.
Yes.
Do you do VA loans very often?
Absolutely.
Okay.
Yes.
Now, the rumor on the street is that they're harder to get. Is
No.
that what you feel?
I think what happened was when we were having the crisis for the appraisals, VA was harder to get closed because their turn times were a lot longer. There were some people that were waiting for their VA appraisals for a month, and it just became too difficult. But right now, VA appraisals are back on track. Their guarantee to lenders is 10 days from the date of acceptance from the appraiser to be returned back to the lender.
Wow.
So it's not an issue anymore.
Well, you get into another thing I want to bring up. 10 years ago, I was in banking, and that's when the slide started.
Right.
It actually started on the East Coast first. We didn't feel it until late 2008. But some people started going into foreclosures in Portland. We started seeing foreclosures pop up late 2007. How long after a foreclosure before you can buy another home?
Well, that's a great question, and so I don't put my foot in my mouth. I'm going to look up my chart here. So it depends on the type of loan that you're getting. But for a foreclosure for our conventional investors is 4 years.
Wow.
For FHA, it's 3 years, so
Wow.
it differs. And then USDA is 3 years as well.
Wow. What about short sales?
Same thing. It's a deed in lieu, foreclosure, and short sale are the same.
And the big one, bankruptcies.
The bankruptcy for conventional is 4 years, and for FHA it's 2, and VA is 2, and USDA is
Now, friends,
12 months.
in other words, after these seasoning periods, after a foreclosure or short sale or bankruptcy, you can apply for a loan. Are we closing loans with people right now
Yes, we
who've gone
absolutely
through
are.
all of this?
Absolutely.
I know I've closed a couple of deals with people who've had short sales and in fact, all of it.
Right.
And it's fascinating when you run into a buyer, a potential buyer who wants to buy, but maybe in 2010 they had a short sale. And they're thinking they're not going to be able to buy another home, if ever.
Right.
They figure maybe 10 years. One lady told me she felt maybe in 10 years her and her wife would be able to buy a home.
Correct.
And I was like, well, I don't think you have to wait 10 years. But
That's what we're seeing now is a lot of people that have had, that's why I said earlier, bad things happen to good people. A lot of great people lost some wonderful jobs and they're recovering from it now. And if they've reestablished credit, getting a small credit card, paying it off every month, building up their credit again, they're definitely in a position to buy again.
wow. Well, hey, GaSandra, I want to thank you for all of the great information you're sharing with the buyers that I'm working with and hopefully the public,
Sure.
Stewart Group Realty. I want to do this again with you sometimes. Is that good? Is that good for you?
I would absolutely love to.
Okay. Everybody, GaSandra, what's your phone number?
My cell phone number is 503-351-1802.
And your email?
GCarlson at envoymortgage.com.
And that's Envoy with an E.
ENVOY.
Yeah, you got to remember, some of us, like me, we graduated from a Portland public school, and we're known to not spell very well. At least I'm known to not spell very well. And so, GaSandra, we're going to end this now. Everybody, if you have any questions, feel free to post in the message comment section at the bottom, or contact GaSandra, contact me, or better yet, contact your favorite real estate broker out there. If it's not me, hopefully it's me. Feel free to make me your favorite real estate broker. But the main thing I want to get across in this video is I don't want you to be afraid to explore what you can do for yourself in your future. Anyway, this is Fred Stewart out. You guys all have a good day.